Hey everyone, it's another episode of James and
And James.
hey, how's it going, James?
It's going great. How you doing, James?
I'm doing pretty good. So today we're going to talk about dispelling myths about what we hear in the real estate and the mortgage industry. What are one of the
Uh,
things that you've heard or
Man, thanks for asking, James. Where do I want to start? The first thing we always think about is the market's going to crash. Interest rates are going to continue to go up. It's not a good time to buy. I'm going to just continue to rent. That's like the biggest myth I hear all the time. What about you on the lending side?
well, I always hear like, well, every time I get my credit score pulled, there's a hit on my credit or uh right now, like same thing. Right now is not a good time to buy, or they're not a good time to
Hmm.
sell, or rates are so high I can't afford anything, or I mean, I
Right.
could go on and on as well. It's like, or that house is overpriced, or
Exactly. You know, that's why I'm so glad that we collaborate and got together. I mean, not only is James Hagler a good guy, but he's also very knowledgeable. I run into the same thing. And the most important thing is before we start talking about dispelling any myths, I always let my clients, consumers, people that know me in this space know this. Whether you own a home or you're renting a space, you're still paying somebody's mortgage.
hmm
The difference is if you own a home, you're gaining the equity, you're gaining the luxury of not having to worry about the mortgage rate going up every year. You don't have to worry about the owner doesn't want to renew the lease when the lease expires. But if you're renting, you're facing all that volatility. Rent's going up, can't control who your neighbors are or whatever. Well, you can't control neighbors in a home, but if it's an
right.
apartment building, you got to deal with people above you and so on and so forth. It's so much more advantageous to own a home, regardless of all the rumors and whatnot that are out there. And again, I'm glad we brought this
Well,
conversation to
that's
our.
and that's another thing is what I say is there's leverage when you own a home versus renting a home. And a lot
Right,
of people are like, what
right.
do you mean by that? And I'm like, well, your leverage
Yeah.
is your equity, right? So if you
Okay. Hmm.
rent, you can't you don't have equity when you rent. You don't
Right.
have the value increasing and that equity gaining. If
Hmm.
something were to come up, you can't sell your rent. If you're renting, you can't sell to get money, right? It's not your property,
Right.
right? So, but if you own
Right.
a home and you need to, let's just say something, we don't want bad things to happen. We don't want to lose our jobs. We don't want to end up in the
Hmm.
hospital. You don't get sick, but things happen. And if you own a home, there's something to leverage there. You can do stuff to the property or the home that you
Yeah.
want to do. I helped a client. They bought a house here in Marysville, and I was looking out their window because they invited me over to check out the house after they moved in. I look out the bedroom window. I'm like, wow, somebody really painted their house purple. It's like the only house in the neighborhood that's purple. Now that neighborhood has like a HOA, so I'm sure they have rules about painting their houses colors. But I was like,
Yeah.
well,
Yeah.
you can do something similar. You can paint your house whatever color you want. You can do whatever you want in the yard. You can remodel. You can, there's that, right?
Hmm.
Because you're going to
Hmm.
remodel or do something like that to improve the home to then gain equity. So that's one of the
Yeah.
things I like to add comparing, well, renting versus owning.
And there's also a counterpoint to the whole renting versus owning piece, and the fact that renters typically have a lower entry point. I don't know if that's true or not because typically with the rent, say $3,000 a month place, that's pretty much what you're going to pay for a three-bedroom, two-bath house in rent. Maybe less. I don't know. Maybe less of a house is what I'm saying, but I'm sure the rent is about that point. And you may have to pay a deposit. So maybe you're looking at $6,000 to get into that unit. Maybe a little bit more if you have another kind of cleaning deposit. So let's just say it was three times the amount. That's 9 grand to get into that $3,000 a month rental. How much are you going to spend in a down payment? I know you have a mortgage calculator on your Leader One app, but I'm just saying, just for smiles and giggles, say it was $15,000 to get into that $300,000 house. You know, I mean, Well, why would I want to spend $15,000 of my savings when I could just spend $9,000 and not have to worry about the repair cost or the improvement cost to the property?
Well, I
You know,
just
you
go
ever heard
back,
that?
right? But I just go back to, yeah, but that's the investment of buying a home, right? Because it's an investment,
Exactly.
right? So if you're taking nine
Hmm.
grand versus an extra 6 grand to buy a home,
Hmm.
your return's gonna be higher than that 9 grand, right? So of
Right.
the nine
Right.
grand of renting, there's no return. But the 15 grand, there is a return. And it can be a very lucrative return in some cases, right? I
Right.
mean,
Because we got
you
we got
know,
we got equity gains like you mentioned earlier, right? You got equity gains, and
hmm
then
you got
according to our
your
tax
property
code,
taxes, or
hmm
you get a write
refunded,
off on
right?
that. Yeah. So
Yeah, exactly. Yeah. And then also again, like this is the benefits of quiet enjoyment. You don't have to worry about someone disturbing you with, I got to
right.
come in for an inspection, or again, like I'm raising the rent or whatever, or
Hmm
hey, you can't paint the walls, purple. Like you
Right.
have to leave it the way they want it. So speaking of other myths and dispelling rumors and misinformation out there, what other sources or what other information have you heard that's kind of conflicting with what's actually going on in the local real estate and mortgage
Uh,
industry?
One of the things is, when people call me, they're like, "Well, do you pull credit?" And I'm like, "Well, yeah, if we're gonna
Uh huh.
look at your debt and what your credit score is." And they go, "Well, I don't want to get my credit pulled because I think it'll hit my score, right?" And I'm
Right.
like, "Well, yeah, I mean, a hard hit inquiry may lower your credit score, but the impact is usually minimal, right? It's just if you're
Yeah.
going from like me to another lender to like you'll see these inquiries. That's gonna
Hmm.
probably hit you more than just, hey, let's look and get a pre-qual or pre-approval, right? We're gonna
Right.
eventually have to pull your credit to do the
Yeah.
mortgage. As
Yeah.
of right now, though, things have changed with us, especially with where I'm at Leader One, is we do soft credit pulls now. This is what happens. They don't want to get their credit pulled, but they think they know what their credit score is because they go through like those consumer credit reporting.com websites or
Sure.
whatever,
Yeah.
and they only
Yeah.
give you like that one, like let's say Experian only gives you that one report, right? And
Right.
so they go off of that credit score, and then when we do pull credit, we see, oh, you have a collections they didn't know about, right? Or there's some
Hmm.
lien on them, or there's something going on that they weren't aware of. Then we're like back to square one.
I was going to
Right.
say to that point, isn't it true that there's three credit bureaus out there? Credit,
Right.
you
Right.
said Experian, right? The Equifax and
Experian,
TransUnion,
Equifax, and TransUnion. Correct.
and then the mortgage industry, you have to look at all three. Is that correct
We
or
look
no?
at all three.
And I've actually seen this. It may be rare. I don't know if you've seen it before or not. I've had a buyer client that only had two credit bureaus reporting
Mm-hmm.
on him. Never, the third one was missing.
Mm-hmm.
That's a problem, right? That's a big
No, not
problem.
necessarily. No, if that's the case and it's a true poll, like I've polled before and I've only seen two. We use the lower of
Okay.
the two, right? So
Okay. Perfect.
what we use is to pre-approve for in mortgages. We use the mid score, right? That's why we pull all
Hmm.
three. But if there's only two, we use the lower of the two, right? And
Oh, got it.
if there's more than one client, there's two clients, we use the lower of the two mid scores, right? So if you got
Hmm.
borrower one as their mid score is 720, and then client two's mid score is 680, we use 680. We use lower of the two mid scores. But if there's only two scores, we lose lower of the two. I've seen people not have any. I mean, we're talking about
Oh
like
wow.
an 18, 19-year-old person who's never had credit cards or car loans or anything like that. So
Hmm.
there's a thing called non-traditional credit, and that's where
Okay.
we pull your credit and there is nothing. It's just one page with your info, right? It's just got your name, social security, and all
Hmm.
that, but it has no credit score. Then we can look at non-traditional credit, and that would be like 12 months of your rent history, 12 months of your cable bill, cell phone bill, utility bill, and then whatever the other one is, right? It's
I
kind of
see.
tough to do that because a lot of times your cable and internet bill are the same, like a bundled
Mm,
package. So they got to be separate.
mm.
It could have changed, but as far as
Hmm.
in the past, from what I've seen, it's like, oh, your cable and internet are the same. We need one more, right? So
I
it's not
see. I
separate.
see.
But that's a non-traditional credit thing, and that's just showing you make your you pay your bills on time, right? And there's
Hmm.
no lates, and then we go from there.
Got it. So, I mean, everybody's got Uncle Eddie who has bought a house back in the 80s or 70s, and he's telling you now's not the right time to buy, and there's not really much substantial data behind it. But Uncle Eddie says now's not a good time to buy. That's a myth I hear all the time. What do you hear in the mortgage industry?
That's the same thing with me as well. My brother, my cousin, my step aunt, my whatever has bought a house, or they don't advise buying or doing anything. Um,
Yeah.
I mean, I get it. They mean well, right? They're looking out,
Hmm.
right? That's I can't
Yeah.
go against that, but they don't do this every day, right? So I always ask like Uncle Eddie, well, what does Uncle Eddie do for a living, right? Oh, he works for Boeing or whatever. I'm like, okay, well, he could probably get it. I mean, I'm not going to tell somebody how to make a plane, right? Because I don't do that
Right.
every
That's
day.
true. That's a good
So
point.
Uncle
Yeah.
Eddie, saying, well, you shouldn't buy a house. Well, I would like to talk with Uncle Eddie, just to
Yeah.
find out, like, just to pick his brain to find out where he's coming from. But, again, they mean well. I get it. They're family or they're
Hmm.
friends and they're looking out for you. But that's not helping you because they don't do this every day. They don't know what rates are doing. They don't know what guidelines have changed or what processes are now. I mean, what about you? Have you ever come across that where somebody's like, well, my friend told me I shouldn't do this. I shouldn't buy a house right now because
Yeah.
again, you go
Yeah.
back to that the market's going to crash. That's one of the main
Yeah.
things that people say. It's like, well, the market's going to crash, but if you look back at people that were able to sustain their house, their finances and whatnot back in 2008, those people that were able to
Hmm.
still make their mortgage payments, they didn't lose their jobs, or they're able to
Hmm.
keep the home. Look at where they're at now.
Yeah.
It's
Yeah.
just it's just it make I go. There are cycles in the real estate market and there are ups and downs, but there's more ups than there are downs. It's like I
Hmm.
mean, you look at the stock market too. I mean, the stock market crashed back in 2008, but look at people
Hmm.
that still are invested in the stock market now. I mean, it's the Dow's higher than it was back in 2008 now. So,
Yeah.
do people
Yeah.
say don't invest in the stock market? Don't invest in your 401k because it might crash? No, I bet you those same people they have a 401k.
Yeah. Yeah. No, in our industry, we get I wouldn't call them objections; they're just myths and whatnot. The bottom line is, folks need a place to live. Shelter is
Right.
definitely something that's of high importance. And I just circle back to where we started in the beginning. Whether you rent or you own, you're going to still be paying someone's mortgage, and the value and the benefit of owning far surpasses the costs or the lack of financial wealth building potential that comes with owning a home. So I typically navigate that myth by sharing the fact that we need a place to live. Yes, you could rent, you could continue to rent, you could continue to pay more and more over year, or you can make that investment in purchasing, and then you watch those equity gains come about over the course of time. The next thing
Right.
is this is really good where we collaborate with talking with the right realtor like myself over at EXP, or doing the same thing, talking to me who has a relationship with someone like you.
Mhm.
Thus, we get them in front of you so we can talk about different loan options, things like ARMs, things like rate buy downs, those
Right.
things to help the buyer understand that we're looking to help you out. Because ultimately, especially now with that multiple offers are starting to creep back into the picture, the biggest thing to think about is we're talking about the overall mortgage loan amount. But are we talking about that? Or are we talking about the monthly payment? And we think
Mhm.
about the monthly payment. That's what I find is most important to my buyer clients. They're worried about how much do I have to pay per month. And we talk
Right.
about the payment per month and how we equate that into the purchase price. I tell them like, look, for every $10,000 you spend, you're pretty much looking at $50 a month in payment. So if we
Mhm.
have to go up a little bit in price to compete with other competing offers, hey, 10,000 bucks it's typically about $50 a month in payment.
Hmm.
And we can all find $50 a month out of our budget. Movie, dinners,
Coffee.
sacrifice that
Yeah.
luxury coffee, you know,
Yeah.
how much is a cup of coffee, and how many days in the week and how many weeks in a month.
Right.
You can
Right.
find that $50, get yourself in that home, and you're going to be so much happier once you've done it. I've got clients that are praising me now for talking them off the ledge and saying, I'm glad you explained it that way because it makes sense and they're happy and they're seeing the values of their homes go up significantly from when they first purchased.
Right.
Since the internet's been invented, the advent of the internet, there's so much clickbait, so much misinformation out there, maybe even in the media outlets. How do you deal with that?
Well, one of the main things on that is where's the source? Who's doing, right? Who's providing that
Uh,
information, right? If I look it
yeah,
up, typically when you're on the internet and you're reading a story, you can see who wrote that article or that blog or
uh,
whatever it is.
yeah, yeah,
You maybe even do a little bit more research on finding out who that person is. If they're just somebody that just creates content on a blog and they just type out this is
yeah.
why, well, again, we're going back to Uncle Eddie, right? Nothing
Uh-huh.
against
Yeah.
anybody out there that are Uncle Eddies, right? It's just a figure of speech, but it's good to source out that information
Hmm.
because the internet is not, it might not come from a qualified source, right? So
Right, right.
call us, contact
Yeah,
us, find out
exactly.
what that really is.
It's right. I totally get it. And that's what I see too as well in the industry, especially with like a lot of the disruptors that have lost a lot of the steam, some of these other online based marketing companies that want to enter into the real estate space. They advertise low this or low that, discount this,
Hmm.
discount that. And my clients have found that over the course of time, you get what you pay for. And so
Right.
the trusted, tried, true, innovative real estate market that's driven by realtors like myself, that's how we win in this business because we're providing value, we're providing consistency over time.
Right.
It's trusted, proven, it's true. We don't base it off of speculation and rumors. We're basing it off of facts and good economic analysis. And that's how us in the real estate industry, defeat those, headlines that are sensationalized, just again, clickbait because they want to get
Yeah.
people into those
Well,
platforms,
that's it.
watch those videos.
Right. That's the thing is, and I'm not gonna name any names. We always I try to, but I always get the phone call. Well, James, this place is offering this, and
Yeah.
whatever, right? And I'm like, okay. And I go in and I go send me the link, and I look at the link, and
Mhm.
I'm like, well, there's always the fine print, right? And then to fine prints, like we're not all the same, right? Like my credit score is different
Right.
than your credit score, right? So it's not the
Yeah. Yeah.
same, right? So when they go on online, I mean, they go online and they go, well, look at this rate and they're offering this. I'm like, well, did you read the fine print? There's a fee
Right.
for that rate. You have to have a 740 credit score, and it's based off of just that perfect scenario. Right. One of the things that I hear people say to me or ask me is, um, you only need to get pre-approved if you're buying a house. And I tell
Mhm.
people, if you're even just interested on to find out what you could buy or how much you could afford or what that a pre-approval amount is, let's just do the pre-approval, right? There's no
Mhm.
obligation when you get pre-approved. You don't, just because you signed it, you filled out an application, you got your credit pulled and all that stuff, you provided all that income asset information. There is no obligation for you to have to go buy a house, right? And if there's anything that we need to correct, like if there's a collection that you didn't know about, or if there's something a credit challenge, we can start working on that versus the reactive of finding out when you're ready, right? And I get
Yeah.
that a lot is, well, I'm not ready right now. I'll call you in 6 months. I'm like, well,
Mhm.
if why don't we just do it now? Because then what if in 6 months we find out there's a challenge? And in a hot market, you need to be ready right then, right? You need to be
Mhm.
pre-approved and ready to go versus the reactive, oh, now I got to do this and do that, right? And then you've missed
Mhm.
out. Just because you're not going to buy now doesn't mean you should not get pre-approved. You should find out so we can build the foundation so that if there are challenges, we can build a foundation to then get to that point. So my question to you, James, is how does the media relate to real estate and mortgages? Like, what have you heard or seen or on the media?
Oh man. Well, the biggest thing that I see in the media that intersects with my business is the rents are going up, affordability, shortage of housing, and things like that, which in some cases is accurate. There is a shortage of housing. As far as we look at the national average of new households that are being created, that's basically when a person, partners come together and they create a household, they have children, and so on and so forth, and you know there is a shortage. If you look at everyone that's renting to be in a home, there wouldn't be enough homes for that. So that's accurate. But when it talks about affordability and things like that, that's where it gets right back into the whole conversation about everyone needs a place to live. But is it better to go ahead and make that financial investment to buy a home versus renting a home? That's the part you don't get. It's just a matter of when I do get ready to buy a home, the media is telling them when people are ready to buy, I can't afford it, and that's what creates panic and chaos when it comes to persons looking to get into the market. I'm just browsing. I'm not ready yet. I don't have enough down payment, and so that's where the whole conversation. And I think as I hear a lot about 20% down and things like that. Well, that's not the case. People get into mortgages with less than 20% down, far less than 20%. And so I defeat that with the facts. And that's why I explain to my clients exactly how the process works. And then I have it supported with a person like yourself, a lender that's actually writing loans, originating loans, that's making deals happen every day. And that's why we love you. So, what have you heard?
Well, uh, other than like, let's say if like the Federal Reserve has their meeting and they have their report come out and they
Hmm.
announce what they're going to do, that's pretty accurate because the media reports right the day after or the day of, right? But when as
Hmm.
far as trends go or what the market conditions are, they're probably like a week off, right? So like something
Okay.
that happened a week ago, like for example, I'm just on my Google on, I see the media clips or whatever, and I'm just scrolling. And I see rates dipped. Well,
Headlines.
that happened like
Yes.
3 days ago, and then because rates are back up today, right? So I'm just like, I'm
Yeah.
even talking to myself. I'm like, no, that's not right. But
Yeah.
they're a delay. There's a delay there in what they're reporting.
Mhm.
So if rates have dipped, that didn't happen yesterday or the day
Right.
before. It happened like a few days ago at least. Of
Okay.
course, I understand a consumer, I am one too, is they're reading something and that they take that for the word. That's what it
Mhm.
is. And I'm just like, no, that's not what like I'll have a client, hey, I heard the rates drop today. I go, well, I told you that last week, remember? And they're like, oh yeah. I'm like, now today rates kind of went back up, right? So kind of explain
Yeah.
that to them. But like you said, they're talking about, is the right time to buy? There's a housing crash, there's a bubble, you see all this stuff, and I'm just like, how do you get this information or where are they getting it from? Are they getting from that vlogger that doesn't know anything
Yeah.
about the industry? And then I know
Right.
it's not from there, but I think that, right? Um,
Mhm.
but when people come up to me and say, well, I read on the news or I saw on the news or I heard on the news, whatever it is, I like to respond, does the local news network pre-approve mortgages? Do you go to your
Yeah.
local anchor and say, "Hey, anchor man, I want a pre-approval"? It doesn't work that way because they don't do that,
Right.
right? And I don't tell them how to
Right.
report the news, and don't tell me how to pre-approve somebody, right?
There
Just
you
like I
go.
don't tell you how to
Exactly.
go show somebody a house or how to
That's
structure a
great.
contract, right?
Love the analogy. Yes. Great analogy, Jay. That's awesome. Well said, my friend. Man, I know the audience is going to have great feedback and whatnot, and we hope to hear some comments from this discussion. But anyway, if you're looking for help, I definitely want to make sure James Hemphill with EXP Realty, we have a awesome opportunity to work together, and we're always excited to take on new clients. So reach out if you have any questions. What about you, James? Do you have any other
Oh, that's what
input
I
or?
say. I think this is actually the best one that we've ever done today. So if you like the information you hear today, hit the like button, subscribe, leave a comment below. Thanks for watching, James and
and James.